Warren Buffett famously said, and I'm going to read the quote, "The biggest thing about making money is time. You don't have to be particularly smart. You just have to be patient." And what it comes down to is the power of compounding growth of your money. So I'm Roy Furr. I'm with Asset Strategies. I'm here with Brian Falkinburg, a financial advisor with Asset Strategies. Welcome, Brian.
Thanks, Roy. Thanks for having me.
Yeah, good to have you. As I said, Brian's a financial advisor with Asset Strategies. We serve over 2,000 clients across 48 states from our offices here in Omaha and Lincoln, Nebraska. And we decided we're gonna run some numbers on what it looks like for compounding growth. But before we dive in, a little bit of disclosure about all of this, right? Whenever you're doing this, you're doing a simplified illustration based on a set of assumptions.
Yep.
So the assumptions that we're working with here are $7,500 annual contribution. And that's based on today's Roth maximum, right? It doesn't have to be a Roth account.
Right.
But we're looking at pre-tax, right? We're looking at pre-tax growth.
Yep.
And based on 8% annual compounding growth, which is less than the stock market has done historically, but we don't know what's going to happen in the future. And we decided to stretch this out far into the future, 50 years. This actually came up because you were having a conversation with a client who was relatively young, who'd started doing all the right behaviors, and who was starting to see some success, right?
Yes, definitely. We see that a lot with a lot of younger folks when they start getting into this and seeing, hey, what the power of compounding can do for you over a lot of years. People, just the little things make a huge difference over the long period of time that people don't realize and don't always think about, and just makes a huge difference.
Absolutely. And the other thing, tied to that Buffett quote, he actually accumulated 99% of his net worth after he turned 50, and he didn't become a billionaire until 56. So, it's not too late. They say 20 years ago was the best time to plant a tree, but the next best time is today. So we can always look at the best behavior going forward here.
Yeah.
So with that, I want to look at some of these numbers. So again, contributing $7,500 per year and 8% annual reinvested growth, right?
Yeah.
Compounding growth. So what does that start to look like after a few years?
Yeah, so we've got a couple different milestones and different things that we've looked at, but if we talk about just 5 years in, $7,500 a year at that 8% would turn out to about $47,000, which is a good amount of money at that point and can continue to grow. And
thinking back in my life, I feel like I was starting to hit milestones like that when I was like, okay, I'm making some progress here. Now I want to double down on these behaviors, right?
Right. Yeah.
Yeah.
And that's what you start to see as we start to get to those, start to build that up. You get to, for instance, year 9, where you get to just over $100,000 within that account.
That's right.
And at that point, you're earning more each year at that 8% than what you would be contributing at that $7,500 as well.
Yeah. As soon as you pass that $100,000, then 8% of that is 8,000, right? So it's going to continue to grow faster than the contributions, which gets really exciting, right?
Yes, it definitely does. That's what I love to see. And again, just part of the why I do what I do is I love that I've seen it in my life as far as what the power of compounding has done with what I've done. And part of the reason why I love working with folks and talking to them about these things, because like you talked about, it's better to do it earlier, but even if you haven't, today is the best time to start if you haven't already.
Absolutely. So if we go forward, it feels pretty fast. It feels pretty fast. We're less than a decade out. We have 6 figures to our name, and even Charlie Munger, billionaire partner of Warren Buffett, said that first $100,000 is the most important, because what happens after that?
Then it really starts to grow. At that point. Yep.
Okay, so we look 20 years out. We're at $370,000.
Yep.
30 years out, we're getting really close to that 7-figure mark, $917,000. And then and note, this is a fairly simple behavior. $7,500 per year invested. That's $75,000 per decade is the initial amount that went in. Right. So at 30 years, let's 75 times 3 gets us to 225,000 invested,
Yep.
and we're at 917,000 total account balance.
Right.
So when do we get to call ourselves millionaires in this account?
It's a very good question. So, in this particular scenario, it'd be year 32 where you go above $1 million in that particular account.
Uh, That's that's exciting. I mean,
Yeah.
and this is, I would say, this is kind of the millionaire next door approach, right? This isn't
Right.
get rich quick. This isn't like go be some Silicon Valley entrepreneur and venture
Right.
capital money. This is just somebody who's that little bit of discipline, that little bit of consistency
Yeah.
doing it. Okay. Now we have another milestone coming pretty quickly after that 32 years.
Yeah.
Um, yeah. Tell me about it.
How quickly that you can make that million turn into 2 million? Is that kind of what you're thinking?
Yes.
So
Yes.
yes, so you think about that too. When you have $1 million at year 32, it turns into 2 million by year 40, which is huge. When you think it took you 32 years to get to that, but that next 8 years get to that $2 million. So
That's incredible. Now, another little milestone along the way there is at year 35, you actually crossed six figures in annual growth from
yes,
those investments. So you're still contributing 7,500 a year, but that 8% growth is more than $100,000.
yep, that's exactly right.
Well, that's incredible. Now, assuming that so 50 years is a long time. It's also
Yeah,
not that long if someone's starting early.
right,
Somebody in their 20s, if somebody started at 20, they might not retire until they're 70, especially if they're healthy, especially if they're enjoying their career.
right,
So that 50 years, this could be just during their working years.
yep.
Somebody who's 50 could live to be 100.
Oh yeah,
That happens for sure.
yeah,
So even if they're starting today with some income source up to age 100,
right.
they could see this growth, assuming this model scenario, right? But what happens after 50 years of just contributing $7,500 per year?
Yeah, so that after 50 years, that would turn into $4.6 million that they would have at that point. And also, when you start to look at that, how much their growth at 8% on that $4.6 million is $344,000.
And let's
Uh,
contrast that. The total amount of contributions for 50 years at 7,500 per year is 375,000. And just that last year's growth is 344,000. So
Yeah,
rounding error, right?
yep,
In the difference. Um, so, I mean, this is what I feel like we're talking about when we talk about if you have that determination to build your wealth, to build your financial freedom,
yeah,
and you have the discipline to just do the little behaviors that add up.
yeah,
Obviously, your mileage will vary. Past performance is not indicative of future results and all of that. But these are the kind of models that we're basing plans on, because this is what compounding growth. This is why it's been called, one of the miracles of the world, right?
yes, it is.
And as a financial advisor, obviously your role isn't to save the money. Your role isn't, but um, how are you supporting people through this long journey?
Yes, that's a good question. So, just helping them with that discipline is the biggest thing because, right, we can help out with the investment side of it, but ultimately it's up to the individual person to have that discipline to be able to invest that money, whether it be a small amount or a large amount. Again, over that long period of time, it can make a huge difference. And we just work to help you find ways to be able to save towards those things that you want to be, whether it be for retirement or it can be for all kinds of other things, saving for a future house purchase, future whatever it might be, cars, whatever that you're buying. But saving and living on less than you make makes a huge difference. If you can do that, and over a lifetime, you can amass large amounts of money if you're just able to be diligent about saving that money.
Yeah. And again, I recognize that in some circumstances, $7,500 feels like a lot. But with the consistent work ethic and showing up and doing it, $7,500 per year is very achievable for folks. And it's quite surprising what even that amount can add up to for the long run when you add compounding into the equation. So
Yes.
as a financial advisor, you get to guide and educate people and celebrate people as they're
Yep.
crossing some of those milestones for sure.
Yes, we love getting to celebrate it as you get past these different milestones, and there's a lot of different milestones through your life that you get to celebrate. But it is important to, have those goals and celebrate them when you get to those things of different parts of all the different places where you want to get to in life. So,
Excellent. Well, Asset Strategies works with all sorts of clients who are at all sorts of different milestones along this journey, right?
yep,
And if kind of no matter where you're at, if you would like to come in and speak with a financial advisor and just get a sense of, are there things that we could be doing to support you as you're going through this journey, you are free to request a no cost, no obligation welcome call, and then welcome visit with a member of the team. We'll include a link with this video where you can do that. Brian, thank you so much for sharing and going through these numbers with us.
thanks, Roy. I appreciate it.
All right. And thank you